So today I'm joined by Langley from OnPoint Mortgages. Lee is a business owner. He's a mortgage broker specializing in specialist lending. I believe you're also doing quite a lot of protection advice these days. That protection insurance for mortgages, Lee.
That's right. A lot of conversations around protection at the minute, because our job is not just to arrange debt for somebody, but also protect that debt as well. So life insurance, critical illness, income protection, rental guarantee schemes.
Business interruption loans or business interruption insurance?
No, I have got a contact who can do PG insurance, which is pretty useful at the minute.
I've heard about that.
Not many companies that do that, but there's a lot of businesses at the minute taking on loans, and at least initially there was a lot of requests for personal guarantees, so big interest in that.
I'd definitely be interested in talking to someone about the impact on the insurance market, but today we're going to be talking about how the mortgage and the lending market's been affected by all this disruption. The first question I want to ask you, Lee, is: are you seeing sales falling through at the moment? What's going on?
We've seen a couple of clients who are reconsidering their previous offers. A lot of them have gone back in with a cheeky offer to see what the response is.
Is it cheeky though? I mean, come on, Christ's sake, you wake up and the whole world's shut down, the economy's falling off a cliff. It's only temporary, but personally, I don't think it is cheeky. I've been advising my clients, if you haven't exchanged on something, you pick up the phone to the agent and you say, I'm very sorry, all bets are off until the uncertainty's cleared up.
That's very true. I mean, I think at the minute, the difference is I worked for 2008, and back then it was very clear what was happening. At present, the market's almost on hold because valuations aren't taking place. So we haven't yet seen the impacts on house prices. But I think you're right, and some are being looked at. Others are just waiting for the moment to see what happens in regards to how long lockdown ends.
So I've been advising my clients to innovate. Have you guys come up with any way of innovating your business to help you thrive in this time, Lee?
Absolutely. There's one thing we came up with after a Qandor session with Jamil Qureshi, where he talked about, in this scenario, you have to reevaluate your goals. And actually what you have to look for is adjusting your targets and finding sustainable partnerships where you can collaborate with somebody else. And that's something that we've done. Just luckily, before that session, I'd spent 5 hours talking to all of our introducers and saying, where are you struggling? What do you need help with? What can we do? How can we help the public at this moment together? And it's led to some great results. And I think that's key. I think even in regards to your own business and Qandor, I've seen the innovation there with the way that you've taken the sessions online, the training online, the support online, and have taken the product to a whole new level for your members.
You've got to look at these things as an opportunity. This is an opportunity for you to deepen relationships, to prove yourself, and to rise to the challenge. I don't know about you, but I think this is when I'm at my best. I actually quite enjoy it.
Absolutely. You see the difference. It's interesting to observe people, isn't it? And some people are going into hibernation during this period. Some people are floundering, and some people, they're taking the bull by the horns.
There's opportunity in disruption. There's always opportunity in disruption. When do you ever watch a David Attenborough show and the lions sitting on the Masai Mara complaining that the wildebeest are running around all over the place and it's chaos? That's what you want. I mean, obviously you've got to be sensitive because people are sick and some people are dying and families are affected by this. But when everything starts to move a bit, everybody starts to reevaluate what you're doing. We've had a small number of people who've had to leave the club. That's perfectly natural. But we've had a lot more people inquiring about the club, a lot more people coming forward. I know you told me as well you've had a ton of inquiries. So it's a good chance. It's a good chance to just take advantage of opportunities.
Absolutely. I think your network is key, and I think at times like this, you pull back in terms of your network, and that's where being part of a club like Qandor is invaluable because of that network.
I'd agree. My network's just had a massive boost, and there's huge value in that. Now, I know you've got a reasonable sized team that you're presumably working remotely and coordinating things with rather. How concerned are you as a business owner?
I think at the minute it's that element of the unknown in terms of timing. So business has largely been affected by delays on getting applications through. There are some solicitors who will not exchange on a purchase. There are lenders who are working from home, especially big high street banks on legacy systems. There are lenders who have furloughed staff. Valuations unable to take place unless it's a low loan to value or a standard property, and they can carry an automated valuation. So at present, it's more of a delay in the process, and I think it's just keeping a keen eye on how long it lasts for.
Now, I've got a few friends who were concerned, one in particular, actually, Jamie Waller, who wrote Unsexy Business. He was pretty keen to get a contract exchanged on one of his properties with a delayed completion. Have you got any deals where the vendor or the buyer, they exchanged contracts before the coronavirus situation escalated, and now they're supposed to complete? And if so, how's that going?
Yeah, so some lenders have been very good in this scenario, whereby they're extending offers out. So if a client can't complete, they are extending an offer by 1 month, by 3 months, almost as standard, just to help clients through that process.
But if I was a vendor and I had a buyer lined up to complete today, I'd really want him to complete. A contract's falling over where they've already exchanged.
Not that I've seen so far. I think in this scenario, everybody is in the same situation, and I think there's a level of understanding at the moment, but that may change depending on how people's financial situation is affected.
Okay, so in my mind, it's only a matter of time before the lenders start to change their policies and their processes. Are you seeing them begin to incorporate the new world, or albeit a temporary new world, into their processes? And if so, how? What are they doing?
Absolutely. On residential lending, when someone is buying property for their home, lenders have started to ask some questions around someone's employment status. So have you been furloughed? They're starting to come out with specific criteria on that to say, but if you have been furloughed, we'll only take 80% of your income. And even on buy-to-let, I had a case yesterday, 2 chaps buying a buy-to-let investment property. One of them had recently gone self-employed. The lender has come back and said, how has COVID-19 affected your recent self-employment? Looking for an explanation on that.
What do you say when they ask you that? You just say, yeah, no, it's fine, it's all good.
I mean, of course, his situation had been affected. He's a project manager and he only gets paid once the project completes. Now, in that particular scenario, he has actually taken another job. From a risk perspective, he is the second applicant. There's a primary applicant who is the main income earner, and it is a buy-to-let property. So you would hope that they would take a reasoned response to that. But we only just went back with a response yesterday, so we'll see what they come back with. Okay.
Now, obviously, one of the main things we should be talking about here are rates and loan to values. Are you seeing rates go up and loan to values go down, or am I wrong to assume that?
Initially, we saw when the Bank of England base rate dropped to the record low, we saw a lot of lenders, especially on the high street, who do face greater government pressure. We saw them bring their tracker rates down accordingly, and also their variable rates. But a few days later, some lenders did withdraw tracker rates completely. In terms of the fixed rate market,
why would they do that if their margin's still there? Why would they withdraw a tracker rate if there's still a margin for them to make money?
It's a question, isn't it? I think it's just concerns over. It's similar to pre-2008 when lenders were taking much smaller margins, and you have people stuck on very, very low rates that they now can't shift them off of. And I think it's just that concern and that uncertainty over the tracker market, and it's just being conservative.
Okay, so when that number of the rate gets so low, people just never refinance. It doesn't matter if the margin's still the same, or maybe if the margin's greater, it's just they want a bit of churn in their books, I assume.
I would assume it's probably because they're looking for a bit of churn. Fixed rates, meanwhile, haven't really changed. If you imagine the lender at the minute, because they are trying to work from home, legacy systems, some have furloughed staff, their valuations on hold, some solicitors aren't completing. They don't want to expand their book of applications that are going through at the minute. So they haven't really passed the rate reduction on terms of their fixed rates, because at the minute they're trying to slow business down.
Well, presumably they need to, because they're overwhelmed and their business can't run as efficiently because their staff are all spread about and working from home. Some of them are furloughed, presumably. So I get that. What about loan to values?
Loan to values, lenders have reduced loan to values. Again, it's an exercise in slowing down the number of applications that are through the door. Also, I have spoken to some lenders who are factoring in a potential reduction in house prices. So what they don't want to be, if the high street are lending at 95%, they take it down to 80%. If they factor in a potential 15% drop in house prices, then they now go back up to 95 as opposed to being 110. From a buy-to-let perspective, we have seen some lenders go from 75 to 60%. Again, factoring in that potential risk for a drop in house prices. So loan to values have been coming down, not in all instances. There are some lenders who have held firm. Their buy-to-let lenders maybe still at 75% loan to value. They're trying to carry out an automated valuation where possible.
What's an automated valuation? You mean desktop, remote?
Is a remote desktop valuation as opposed to sending a surveyor around. But as you can imagine, if they're the ones that are still lending at that level and trying to carry automated valuations, all of a sudden they get very busy and swamped with work. And already I've spoken to a couple of lenders where I said, would you consider this case? And they've come back and said, just hold tight. We're just reviewing the valuation situation at the minute. So it's a domino effect.
Are they accepting homemade videos and homemade photos and things like that?
Yeah, I think we were talking off screen about innovation, and I have had lenders who have said, we're looking to see what we can do in this particular scenario, but it's subject to them getting it signed off and approved by their funders, who naturally are very conservative at the minute. And I don't see most of the survey is carried out of the property, carrying out the research, and I don't see why you couldn't use a video to show somebody around the property. I think that you can't maybe carry out the damp and timber readings in terms of the damp report, but maybe there's a way you can condition for that afterwards. So I've heard of a few ideas. I've heard of lenders say, well, why don't we issue a formal offer, condition for the valuation to take place afterwards? But lenders don't really like to issue that formal offer until the case is secure as possible. FCA regulation a few years ago did make the offers binding, so there's an inherent risk in there. I even had one lender come back and say they were considering the use of drones. I can't imagine the market moves quick enough for that. I don't know if that's the solution.
Yeah, that sounds like a PR stunt to me. But the reason I'm asking about homemade videos is because we just hired a great videographer, and maybe I could get him to do a glossy video in my house. Go for one of your cheeky offers.
That'd be helped by how good your videographer is.
So one thing I definitely want to ask you about is the different types of clients you've got. So you started your business at my event when did you start your business?
In March 2017.
2017. Okay. So 3 years now. I've watched you grow this business. I've watched you build your team. I know you arranged a difficult mortgage for one of the Qandor's advisors, actually. He couldn't get that mortgage. And thanks to you, he's kept his existing home, bought his new forever home for him and his 3 kids and his wife. I know you work with a lot of HMO landlords and property investors, do a lot of bridging loans. I know you might not want to encourage all the challenging cases, but that kind of seems to be where you excel. What about holiday lets as well? Holiday lets on pause? You've been doing more of those recently, or what?
We've had a lot of inquiries for holiday let service accommodation in the past. We do have a few inquiries ongoing at the minute. That area is pretty much on pause at the moment. Lenders are holding off, and they're saying, well, we may be interested, but come back to us in 6 weeks, 8 weeks, and let's review the situation again. So it all depends on the profile. If the loan to value is low enough, if the client has a track record in terms of managing holiday lets or serviced accommodations, then there are still lenders where it may fit within policy at the moment. But if you're looking at higher loan to values, someone that is relatively new to the industry, I would say that area is certainly on pause at the moment.
What do most investors do with their holiday lets? Are there specific holiday let products available now?
There was typically in the past, lenders have been hamstrung by the fact that a lot of the commercial banks require 2 years experience before they lend you on a holiday let basis. But how do you get that experience if the funding isn't available? And it was a big issue. Now, slowly lenders had started to relax that criteria. So we had lenders that would consider it as long as you've had maybe a year's experience just in standard buy-to-lets. There was also a lender called Foundation Home Loans who came out with a product that's very similar to a buy-to-let mortgage, where they would actually assess it on the standard AST rent. And if it fit on that basis, they work on the assumption that you could always revert back to a 6-month tenancy. Now they've actually, as of today, the 9th of April, they've paused lending for the time being, and that product was actually one of the first products that they withdrew. But lenders had definitely started to become more flexible in that regard, but they are at the moment reviewing.
Was that a decent rate, that product?
Really good rates, starting from low threes. So depending on how long you want to fix in for loan to value, but it's priced at a HMO type mortgage.
Low threes is cheap, isn't it? I mean, people get complacent, they get used to this cheap debt, but threes is cheap. Not as cheap as my flat in France, actually. You can get a 20-year fixed rate mortgage at 1.3.
Yes.
20-year fixed. It's phenomenal, isn't it?
It's amazing. And
go on.
It's there are some brokers who are busier than ever at the minute, and those brokers that transact international mortgages where the property is abroad, busier than ever at present because rates are so low, you can fix in for 20, 25 years.
So one thing we definitely need to be mentioning is these payment holidays. These are just short-term breaks for landlords who want to add interest payments and capital repayments to the end of the term of their loan. Is that correct?
That's right. Mortgage payment holidays are not new. There are some products that come with mortgage payment holidays as standard. But what they've done is they've removed the requirement from the lender to assess that that is the best solution for you. So now you can almost self-certify that you've been affected by COVID-19 and request a payment holiday. And at the moment where cash is king, cash flow is king, it can be a great option for people to defer those payments for that 3-month period. The mortgage payment is set to 0. Interest does still accrue during that period. And as you quite rightly said, a holiday sounds nice, but it does still have to be paid later on down the line. But it's been a great option for clients, and we can't arrange the mortgage payment holiday for a customer. They have to contact the bank directly.
Right.
But from all of the people that we've helped, just providing contact details, guidance, we know that there's been a huge uptake on this.
Are mortgage payment holidays prudent?
I think it depends on your scenario. I think if you're a buy-to-let landlord and you've had issues with tenants not being able to pay the rent, I think it's a great option to create a win-win scenario, at least in a short time for the both of you. Like all advice, it's not correct for everybody. There's been a lot of concern over, if I take this mortgage payment holiday, will it affect my ability to obtain funding later on down the line?
Credit reference files. That's quite important.
Absolutely. A lot of people, before applying for a mortgage, they forget to check their credit profile, and a nasty surprise can be there on occasion. So it's really important that you sign up for one of the credit reference agencies, Experian, Equifax, Credit Karma, which is free. There's no monthly subscription on Credit Karma. And you just want to make sure and see, how has the lender recorded this on my profile? Now, the head of the FCA has come out and said that lenders shouldn't penalise people for taking the mortgage payment holidays, but lenders can record different events on your credit profile in different ways.
Right.
And lenders are working with credit reference agencies to ensure some consistency. So will it be marked as paid? Will it be marked as a U, which means unidentified? It won't lead to a decline later on, but it will probably cause a referral across the bank. You might ask, they might come back and ask you about that.
Yeah, potentially. Although something tells me we're not going to forget about coronavirus for a long time.
Absolutely not. Everybody's in the same situation, right? And you would expect that after this, lenders would be very conscious of this time period and the measures that people are able to take. Yeah,
we're living through history right now. So the next thing I want to ask is, what products are you seeing being pulled?
So holiday let, service accommodation products.
All on ice, or not all on ice, but generally.
Not all on ice, but a lot of caution around them. Higher loan to values, big concern there. Outside of that, I don't see any other products being pulled completely at present. They're just managing their risk. You might disagree in this scenario, but I think that the response of lenders has been quite reasoned to this in terms of temporary withdrawal of products, reductions in loan to values, not reducing rates to stem that flow of incoming business that they're not going to be able to handle sufficiently. So I think that lenders were better prepared this time. And I think the response so far has been fair and reasonable. And again, even those extra queries around what is your COVID-19 strategy, I think asking a portfolio landlord with 4+ properties, what is your strategy during this period? I don't think that's a bad thing. And I think that sometimes clients, when lenders are carrying out their due diligence, their aim is to get those funds to release that equity or purchase that property. And they forget sometimes that the bank's due diligence or the lender's due diligence is also a service to you, because if you pass their due diligence, they're looking to take care of themselves, but at the same time looking to take care of yourself. So it doesn't feel like it, does it, when lenders are repeatedly asking for more information?
No. A lot of time as investors or developers, you can become emotionally attached to something and the confirmation bias kicks in, and next thing you know, you're making a terrible mistake. So you should listen to the banks. But I agree with you. I think that it sounds like it has been reasoned. There isn't really a market at the moment. Agents can't do viewings. Nobody is in a rush to go and buy their next home. I think investors who were already gearing up to make purchases this year are now hungrier than ever to buy property, because clearly, whether you like it or not, this is going to be a buying opportunity. And I think that people who get themselves into the right position will probably make some good purchases, because there will be people, right, who want the money more than they want the property, or they need the money to keep their restaurant going or to keep their business going, or just because they're generally a bit strapped, or maybe their partner's been laid off work, or maybe they've been laid off work. So are you seeing much distress yet, or is it a little bit too early?
I think it's too early at the minute, but you mentioned that point about investors who are still looking to buy. I mentioned off screen that Monday, Tuesday this week, we had 2 of our busiest days for the last couple of months. And we have got investors who are looking to obtain funding at the minute, or line up funding. So we're talking to some clients about portfolio loans. Pre-2008, there was a prevalence of portfolio loans where a lender would lend across your portfolio. They could average out rental calculations and loan to values. And we've got clients who have got portfolios lowly geared, sometimes unencumbered, and they're looking to put in place a facility with a bank whereby they can draw down funds as and when is needed over the next year or so. So there definitely are some investors that this is the point where they're becoming active and looking to say, well, what can we do over the next year or so?
Yeah, I mean, those players in the market are the strongest buyers, right? Your seasonal investors who keep their debt sensible so they can gear up when values drop. There's still equity in there for them to release, so they can go and buy the best opportunities. And then the rest of the time they get on with running their business or doing their job or developing property. But I'm a lot more concerned about developers than I am about investors, if I'm honest, because investors are long, get rich slow agenda, whereas the developers, you're taking big short-term bets, aren't you? And what are you hearing from the development market?
Yeah, so we've got a number of inquiries going on at the minute for developers who have almost completed developments or have completed developments, and they were just in the process of looking to put those units onto the market. The issue for those developers is it's not the best time to sell at the minute, but at the same time, when the PRA introduced tougher rental calculations a couple of years ago, especially for properties in London and the South East, where the yield is not quite as high, one way to obtain the loan to values they may need, talking about 75% loan to values across the development or whichever number of units they're looking to keep. The way to get around that, well, not get around that calculation, but the PRA say a lender must ensure the borrower can afford the mortgage over the next 5 years. If you fix in for 5 years, they don't need to apply a stress test.
Yeah.
And therefore you can get a better rental calculation. So developers have an awful decision to make, which is, do I try and sell these units at the moment? Or in some cases, do I fix in for 5 years? The polar opposite of what they want to do. Ideally, they want to keep them for 1 year, 2 years and review the situation again. So that's a really difficult decision, which all you can do is guide the developer through as best as you can.
Yeah. All right, well, listen, we're running short on time, and I think we've covered a huge amount here. Is there anything in particular you wanted to sign off with?
No, I think maybe a couple of points. I mentioned at the start, we are protection advisors, and you mentioned earlier the breadth of inquiry clients that we deal with, everything from first-time buyers up to people with £400 million portfolios. And what you've seen is that people are closer to the breadline than they perhaps realised. We've seen the figures about 3 times as many businesses have taken up the furlough scheme as expected. And I think there is no immediate coronavirus solution, but I think it's a lesson learned in the future to say, actually, make sure you've got your life cover in place. The protection gap in the UK is expected, they believe it to be over 2 trillion, which is the difference between what should be covered and what is actually covered, which is a huge amount. 3 times as many people insure their pets as opposed to their own income. So I think that's a really important point, that when you are obtaining funding, make sure your broker covers that aspect of it.
What are you talking about specifically? Life insurance?
Life insurance, critical illness cover, income protection. There's various policies out there, family income benefit. It's definitely something that people need to have those hard discussions about. It's not nice to talk about those death and sickness and job loss, but it has to be done.
No, well, I mean, for personal reasons, I have definitely looked at life insurance and I've definitely looked at critical illness cover. I didn't look at income protection, but this is the obscure thing about this situation is even the people with commercial property portfolios have been impacted by this, and the residential landlords have felt threatened by this. I mean, traditionally, we've always thought of that as the most stable source of income there is, apart from perhaps ground rents or something. And it really has been, well, it's just sent shockwaves through everything. But I keep saying this to other people, it's temporary. The whole country just needs a very large overdraft on a short-term basis. Yes, I'm very sympathetic for the people who have restaurants or work in the hospitality sector, because that's really badly disrupted. But you know, like we've got some guys in the club in Qandor who've got a large serviced accommodation Airbnb business with about 160 apartments, and they're at 90% occupancy at the moment because they've worked out how to tackle this. And at least everyone's in the same boat, right? I don't think there's anyone who's having an easy time right now. So we are all in this together, and it will be short-lived. But anyway, I think that's probably all we've got time for, Lee. I just want to say thanks for coming on the show. Thanks for sharing your expertise with us. It's been a pleasure to see you, and good luck.
Thank you, man.